So this video is on ROST stores, and they had earnings late last week in which they beat Wall Street estimates. Also, their outlook was very favorable. In all the news, you saw price jump from roughly $132 to $142 off the highs of about $145. Now, before we intimately analyze the charts, I do want to actually look at the news. So ROST stores reported first quarter with earnings per share of $1.46, beating the estimates consensus of $1.35. The discount retailer also saw its revenue climb 4.86 billion, a slight beat over the 4.83 billion consensus estimates, and an 8% increase from the 4.5 billion in the same quarter last year. Comparable store sales experienced a healthy 3% uptick. Here's what a TD Cowen analyst had to say. They were impressed by ROST Store's ability to out-comp Marmax for a second consecutive quarter, while also flowing through a 37% incremental margin on same-store sales, plus 3%. Here's what the CEO had to say. She attributed the better-than-expected earnings to lower expenses, noting that the company navigated macroeconomic challenges that have been impacting customer spending. Now, looking ahead, ROST Stores anticipates a 2 to 3% rise in comparable store sales for the second quarter, on top of a 5% increase in the prior year. Now, for the full year, ROST is expected EPS to be between $5.79 and $5.98, which is slightly below the consensus of $5.92. All right, so with that said, let's look at the charts. We're going to zoom out to the monthly chart. And a couple things that point out to me. This was prior all-time highs at $132 established back in March of 2021. And although the prior month you had a close below this resistance, now support band, price hit this 13 simple monthly moving average. So what happened to begin the month of May? It opened lower, went down to grab any unfilled buy orders, and then moved higher. Once we got to the $132 level, we had this gap higher. Now, what I could also say is we had a rally, a base, and a drop in price. So we're going to call that monthly sellers. At the 148 level. Let's zoom into the weekly. Now on the weekly, we have a drop in price, 3 basic candles, and then a drop. So we have a weekly level with nested within this monthly level. Let's scroll down to the daily chart. Now on the daily chart, not in love with the price action. A lot of trading up in this area, but this was the level where price broke down. Now on the gap higher during earnings, the reason why price closed off the highs. Number one, you had some profit taking, but number two, you definitely have sellers in this area here. What's also interesting to note is that this 200-day moving average has been serving as dynamic support. So the charts are suggesting price can move a little higher, it would be an opportunity to go short. Thanks for watching. Subscribe. Please like the video.